course, today is going to be the day for the banking majors, ICICI Bank and HDFC Bank as well. So let's try to decode that how are the numbers looking like versus the street estimates, and what could be the likely stock reaction as well. And we have Aditya Shah, founder of Hercules Advisors, joining us on the show right now. Hi Aditya, morning. Good to be speaking with you. Firstly, between ICICI Bank and HDFC Bank, believe that ICICI Bank did post out a very good set of numbers, but it's not the case for HDFC Bank. Help us with more internal details about these banking majors.
The set of numbers from ICICI Bank, asset quality continues to remain really very strong. Loan growth, deposit growth, both at about 12%, means that the bank is marching on. The major genesis of ICICI Bank's revival over the last 3 to 5 years has been the strong asset quality as the bank move towards a retail franchise, and that is playing out. So ICICI Bank is now the market leader. It is doing tremendously well with respect to the loan growth and the deposit growth, as well as the asset quality. So no complaints there. Slow and steady movement of the stock is something that we can watch for. Coming to HDFC Bank, on HDFC Bank, a little bit of deterioration in asset quality is seen. 10,000 crores of contingent provision has been made by the bank, so that in the future, if there are NPLs, the bank can take control of this. 10,000 crores was the quantum of money that HDFC Bank did gather from the stake sale for HDB Financial. Loan growth is muted for HDFC Bank, but the management has guided that FY26 would be a tad better. They expect the loan growth to be hovering around 10%. Deposit growth continues to be really very strong. So the biggest concern for HDFC Bank continues to be that the margins are at about 3.3, 3.4%. Until the margins don't recover to about 4%, there is not going to be any meaningful recovery in the stock price per se. So fantastic from ICICI Bank, steady from HDFC Bank, a lot more desire to be improved for HDFC Bank.
Okay, Aditya, hi, morning. Thanks for your first take on both of those banking majors Q1 earnings. But in terms of stock reaction, how do you think the stock of both of these banks could react, especially given HDFC Bank's commentary that they're looking to create a further provision of 1,700 crore over and above the 9,000 crore that they've already created? What kind of impact do you think we can see on both of these stocks?
I don't see any positive or negative reaction on ICICI Bank. All of this was already priced in. ICICI Bank stock has been steadily trying to move up, and it will continue to steadily move up. So I don't think ICICI Bank stock will have any reaction. Street will give a thumbs up to this number, but not too much of an up move. On HDFC Bank, there could be an initial downtick because the asset quality has deteriorated a little bit. However, post that, I don't think there will be a meaningful reaction on HDFC Bank as well. The market is now waiting for the positive asset quality, positive margin improvement that the management says will come in the next 1 or 2 years. So from my perspective, not a meaningful reaction, a small reaction on HDFC Bank because the margin improvement has not been there and the asset quality has deteriorated a little bit.
All right, Aditya, with this, we let you go on that. Thank you so much for taking the time out and speaking with us. Let's see, HDFC Bank and ICICI Bank both are going to be in focus today.